Hi and welcome to the Market Alert for Thursday the 15th of September 2022. So yesterday's PPI was a lot cooler and helped to smooth inflation fears, but not completely, as it says there. And also yesterday, didn't it just? It went from exciting to boring. Will it get exciting again? I'm sure it will, as we head to next week for the Fed's rate increase. And dead cat bounce finds extra life with the late day panic buying. Yield curve most inverted this century. So again, yeah, definitely recession en route. Today's news, what have we got? We had the inflation numbers yesterday, didn't we? They were a bit of a laugh, if nothing else. Let me just grab those for you. So yesterday we saw the UK CPI dropped to 9.9, apparently a fall in fuel costs, which we have seen over the last few weeks, to be fair, but we know that inflation isn't 9%. We know it's running far hotter than this number. So going back to today's economic news, what have we got? Let's have a look. Anything, mainly the US news, I would have thought, is going to be of interest. Core retail sales, for example, so they're going to show a drop. Well, that's what's forecast. Manufacturing also a drop as well. That was a massive drop last month compared to the previous month of July. Retail sales, again, also minus 0.1, flat last month. Philly Fed as well, everything sort of dropping off there. Unemployment claims as well, set to increase. That's the weekly one, not the non-farm payroll one. So yeah, we'll see, but there are a few other news items in between all of this as well, which you can see there. But other than that, let's get on and have a look at the gold-silver ratio. This down again yesterday, trying to break that support that we see across here. Bouncing off that at the moment, 86 overnight. So let's have a look at the markets for yesterday. A lot of demand for yesterday's markets, as you will see in just a second. So let's kick off and have a look at the Dow Jones. So yesterday we see the markets finding support, or in particular the Dow Jones at 39.73, trading just below this, but you can see the buying coming into the market there, more or less crossing over on the stochastics as well. And sideways overnight, which I'm surprised by. I was expecting to wake this morning and find the market actually moving to the upside. But if we look at this in a bit more detail in the 30-minute chart, you'll see that we've been moving down overnight quite nicely, with each 30-minute bar putting in consecutive lower highs there as well, struggling with last night's close. So maybe the dead cat bounce or panic buying that was stated in the news headlines isn't. But at the moment, what's important is the market stays above the DP, where it's already found support overnight at this level. We're in a sideways move, and I suspect we're going to have a run up to the high on the futures opening of the DAX, supporting the Dow when it does at 7 a.m. If not, watch yesterday's low. Very important, as I've stated before, about these lows and highs. And again, to sound like a broken record, it's very important that you have these on your charts, because they play a very important role in determining the support and resistance of a market. In the German DAX, you can see the demand for yesterday back at 62.78. Market holding above the 20-bar moving average. But again, a bit like the Dow, you can see there's some overnight weakness there in the 30-minute chart. Let's just have a look at this. In fact, actually, before we do this, let me just, in case we get a move to the upside, let me just put some projections on the upside in the daily chart there. These are the areas of resistance trading back to the high that we saw on, what day would it be? Wednesday, wasn't it? Tuesday, when we had the CPI numbers. There, 13,571 would be a very important. It's a long way off, of course, but also yesterday's low, which say we'll look at in more detail now in the 30-minute chart. So yesterday, this is also important as well. Yesterday I spoke about the low. You can see the market coming off the low in the cash market, but then when we revisited, we went through, it then became a resistance area, but they managed to squeeze it back through with the Dow in the afternoon and then lower. But note also that 13,000 held initially, then they drove through, then they brought it back, and 13,000 has been holding. So never mind the low, that 13,000 is very important in the DAX, and I don't know why, but it has been for many months now. So 13,000 is very important. Like I say, we did drive through, and then they brought it back immediately during yesterday's trading session, which if we have a look in the 5-minute charts yesterday, you'll see that we sold off in the futures initially, and then they brought the market back up in the futures, and then we did another surge to the upside. We were already overbought here, but then we went to overbought again, but with divergence, and that weakness played in there, and we brought the market back to the close again, which is why it's important to see 50 bar moving average with demand at the psychological level of 13,100. Market then moved back to the upside where we became overbought here, and again we had this other move to the upside to create a double top, but again we've got divergence. It had run out of momentum, and then from here the market just traded all the way down, as you can see there, until the Dow opened. Let's just move this across. And then when the US opened, we were already down at the 13,000. You can see there we had a go at it first, and we were oversold and starting to show momentum, and they bought back in and moved the market up 50 points to the 50 EMA and the low. You see how we took the low out again. You see how they drove through the low, and then the low became a resistance there, as it did here. So the market came back, and then they slammed it through that 13,000. Take out all of the stop losses that of traders below this level, took all the stops out, and we can see they did that because we've got demand coming back. We're oversold, and then the market then just made its way back to the 200 MA there, again just back above the low, and then the 200 MA becoming a resistance level there. Overnight prices sideways, as you can see they're waiting for the futures to open. The week's trades so far, as you can see there, good day yesterday, adding on 300, 876, 7.15 for the profit factor, and 70 to 30 win-loss ratio, as you can see there. So total profits now, or the balance on the account is 29,000 in profits, because started off with 10,000 account there. So yeah, we'll see what today brings, but fairly quiet yesterday. Well, it was quiet apart from the fact, again we'll just go back to the 30-minute chart there, the 13,000 and the low, which played a part. So watch today's low if we get a bit of a move to the downside, and also watch for resistance in these areas here. But if we go back to yesterday's high, you will see the market is currently 100 points away from the high. So it wouldn't be unusual. That's actually 150 points, thinking about it. Let's just have a look. Yeah, 150 points. It wouldn't be surprising to see the market do this. And again, if we go back to the 5-minute chart for yesterday, there is a pattern that's been emerging over the last few weeks, especially with the dead cat bounces, where the market's moved higher, had a rest, and then gone on to do the second one. And the same here, where it's had a rest and it's overbought, and then it's gone up to take the stops out and then made its move. So don't be surprised, say if we get a move to the upside during today. We'll get, obviously it'll happen in phases as it moves up, and then it stops at the high, which you'll see to the left there as well. So yeah, let's see what the futures do at 7 a.m. S&P sideways to lower as well. Demand yesterday in this market at 89% retracement as well. Similar picture across the board. Very choppy session though, as you see there. This is the 2:30 kickoff in this area, down, up, down, and then the panic buying that's again the news spoke of. If it was panic buying, might be just shorts getting out and the market coming up that way. Watch the DP, the same as all other markets. Here in the UK, again we've got demand yesterday, narrower range, more buying at 78% there, which you can see. And in the 30-minute chart, you'll see we were sideways, holding at the low, then the low broke, and down we came until we got the cluster of volume as the US came on board, stuck in the range, and then moved higher. We're actually currently sitting at the DP, and you'll have to watch the 7,300 level, which is this line here. And then if this is broken, you've got the S1 and yesterday's low there that was made with the US, prior to the US opening, and then retested when the US cash market did open. And in the yen, sitting on the 89% retracement, drawn from there back to there. In the 30-minute chart, you'll see yesterday this was sort of retested again, and it's been retested overnight. So 3 times at this level at the moment. It needs to get back above the DP. Dollar is still sideways at the moment. Closed back above the 50 EMA in this time frame. That certainly showed a bit of resistance, and the DP also to be taken out there. In the pound, again demand holding there, but notice that it looks a bit weakish, and with the US likely to increase rates by 1 full basis point on Wednesday next, you can expect the 78 and 89 to be retested, along with this 114 in the monthly chart. If this is taken out, then we'll have to go back a lot further to find the next one, which I can't even see on this chart. So no, they don't actually cover it. So we'll have to pick that up off a longer term data source. But that 114 then, very, very important for the pound. And finally in the metals, silver holding up well compared to gold, and you'll see why in just a second. 62% retracement back to the upside though is causing this market a bit of grief. We did nearly trade up to 78%. And in the 30-minute chart, you can see holding quite nicely there, getting back above that 1950, but trading below this at the moment overnight. You can see there got a bit of demand at this level, and we're oversold, but it needs to get back above the DP in order to move to the upside. But that's going to be down to the US dollar. In gold, this is quite incredible. Gold is moving sharply lower there, and we must be below 89% retracement from here. Yeah, we're taking that out, so we'll remove that. So 1680, a lot of support here, previous price ranges of support there. You can see there, great big cluster of it. And look at this overnight where the gold has been hammered. Don't know why, but it has, down to the S2. Which you can see there, straight through yesterday's low, and a bit of buying coming in there at the moment. In the US dollar, well, starting to move back to the upside, and it looks poised to actually attack the recent high, already through 38, 50, 62, and 78 and 89 there to give it some grief. And of course, the recent high is 110.445. We know the high that the market is gunning for is 120, so we're still 10 away there on this market. So there you go, and yeah, it'll be interesting to see on this one if it can pull this one off, as let's say the Fed are set to raise rates. And finally, crude oil still green, closing above the 5-bar moving average, not making any great moves at the moment, just stuck it in a sideways range. And the reason apparently for the drop in inflation in the UK when they released the numbers yesterday. Okay, that's it for this one. If there is anything else to report majorly that happens during the day, I'll let you know, but we'll see how the market reacts and see if it can attempt a move to the upside at the open this morning. Okay, that's it. As ever, thanks for watching. See you in the next one.